What up, what up, what up? All right, guys, so I wanted to do a real fast video here on Disney. Disney's coming back to levels it hasn't seen since 2014. So way back in 2014, it came down to this low 90 area, and Disney's seen lots and lots of touches around this low 90. So back in late 2014, 2015, 2015 again, 2016 they got a wick below it. Late 2016 again. This is in the mid 90s, but that's still 2017, 2018. During the COVID pandemic, we went below it, but ended up closing above 90. We about $93, and right now we're at that $94 range. So we're also holding a long-term trendline support that started back in 2009, then saw a kiss again in 2011. COVID pandemic happened, came right down to that trend line, wicked off of it, and now we're within a few dollars again of touching it. There's a good chance that it might wick below it, but we want to look for this monthly candle that closes in 9 days to close above this trend line, and also probably close above, I would say, just $90 flat and even per share. So this is the macro technical analysis. It should be at a good strong support level, especially if the overall broad markets start to turn. The broad markets are turning up today, but as you guys can see, Disney's flat. It's down negative 0.35%. So if you look at fundamentals as well, Disney Plus subscriber growth continues to grow over the last couple of years. I mean, just nice, solid uptrend of growth. The new series that they have out with Star Wars, the Obi-Wan series, Mandalorian, Boba Fett, they've all been spectacular. I'm a subscriber to Disney Plus because of that reason alone. That's not even including everything else that Disney Plus offers on top of that. But they're at 137 million subscribers right now. If you look at ESPN Plus, another offering by Disney that you can get a lot of fights on, a lot of sporting events that you can't get anywhere else other than Disney or on ESPN Plus, this subscriber growth continues to grow as well. They're at 22.3 million right now. And if you just compare that to Netflix has had a long-term growth over the last decade. But if you look at the last 2 quarters, they've had a drop in their subscriber growth for the first time ever. So they're at 221.6 million, but that was a drop down from 221.8 million the quarter before. Overall valuation standpoints, if you look at just the price of sales, 2.25 price of sales. That's current price of sales as well. If you look at future price of sales, it's probably going to be a little bit higher. The 5 years is at 3.25. You can't really look at price to earnings because we're coming out of a pandemic, and there's parks in Disney parks in China that have been closed down for the last year. So we're going to look at it as probably forward PE, which is at 16.75, which I'm assuming that they're factoring in $11 billion net profits in 2022. Which would be right about where it was in 2019, which would put it at a 17 PE ratio at current price as well. So price to book, the cheapest it's been in a long time. 5-year is usually at 3.25. We're at 1.9 right now. So from a valuation standpoint, super cheap. We're at long-term macro support from the last decade, holding the trend line, going back to the last 8 years, 2014. We're at the same price it was. Is Disney stronger than it was back in 2014? I think so. Disney Plus is taking over ESPN Plus. They keep acquiring name brands like Star Wars and others. So Disney's going to continue this long-term macro uptrend. We'll just see if $90 is going to be the bottom right here, or if it might sink down even lower if we go into a deeper, darker pullback in the broad markets. Long-term, after that, support will probably be at 45. Back in the dot-com bubble, where it was resistance several times, and we tested again back in 2011. So there's downside risk, but the upside potential here, if this holds a support trend line, should be pretty good. All right, keep an eye on it. Peace.